Hello everyone, welcome to the market snapshots for today. So what are markets telling us? I think markets are telling pretty much what we have been anticipating, what our data has been telling us. Uh, if you remember, I have been telling at this point of time, if there is one market which looks the strongest globally, that is the Indian market. But somehow, the momentum, the strength is not coming in because of a rising dollar, uh, crude pricing, and that is what we see. I mean, the Indian markets, if at all they are not rising, for sure they're not falling, so that is relatively they are performing very well. It's been almost a month ever since I started saying, not even a month, more than that. I think it'll be close to 2 months now, ever since I started saying that the US markets are not looking good. If you remember yesterday's data, almost everything was strong in the US market, but just look at the numbers. Nasdaq is down by 2%, S&P 500 at 7316. So that has been the reason I have been telling don't make new positions, or if at all you are someone who's very aggressive, cannot live without trading, investing. The exposure cannot be more than 25-30%. See, yesterday's chart, yesterday's number in isolation, they were just looking brilliant for the US market. But I think that is not how markets work. Markets don't work in isolation. There are a lot of factors, which get involved, and that is how markets move, be it long or short. And that is the reason, the data has not been aligned with the US market. Rising yields, dollars, those are not helping the markets either. And that is the reason, I have been telling to either don't make new positions, or the exposure cannot be more than 25-30%. Now let's come back to actual numbers. Nifty 50 at 24,250, which was up by almost 1%. Nifty 500 was up by 1% at 23,350. Nasdaq closed 27,192, which is almost 2% down to prior close, and S&P 500 is at 7316, which is 1.5% below its prior close. This is Nifty 500, the Indian markets. The advances were strong at 376 against the declines of 124. New highs 14, 486. Nothing new happening here. It has been hovering somewhere around 10-15 levels. The breadth in terms of improvement, yeah, it has improved, but anything significant about it, for sure no. I mean, like, it has just improved. That is the only, success is it has had, nothing else. I mean, it is hovering around same levels, above 20 EMA, 258 stocks, above 50 EMA, 296 stocks, above 200 EMA, 280 stocks. So, like I have been saying, at this point of time, even for Indian markets, although they look the strongest, but there are a lot of external factors going on, and that is the reason, the exposure cannot be more than 25-30% at this point of time. Even though today's numbers for Indian markets look good, but that is what I would say. See, the thing is, the markets are going to remain there itself. If at all you can preserve your capital, that is what will help you while the markets become good. Looking at the charts, this is Nifty 50. EMA is flattish, and if you see, although these three candles, four candles show you that the market has shown a lot of momentum, but eventually, this is where the trap is. It is just not able to get out of this zone. And somehow, there is a lot of volatility. The market becomes good today, becomes bad tomorrow, and like the problem is the way it becomes bad, this recovery becomes difficult. So that is the reason I'm saying the exposure cannot be more than 25-30%. At the same time, a lot of strength which was with the small caps, micro caps in the Indian market has started transiting into larger caps, defensive sectors. So that is something, which has changed. So maybe, to get a momentum, there are a lot of, liquidity will have to move from small caps, micro caps into larger segment, and obviously that will take some time. So as and when it happens, for sure our numbers will start showing that, this has happened, and a good time to, increase the exposure. I am definitely not saying that you should be out of Indian markets at this point of time, but the expo if you are holding on to some positions, please hold on to that with your stop losses. But then if you're planning to make new positions, it cannot be, with an exposure of more than 25-30%. S&P 500, same story, everything is good. There's a rising EMA, but the problem is this zone is not getting uh, infiltrated. This breakout is not happening. We might look here and see, okay, this was a very strong 3 4 5 sessions, but the problem is it needs to break this. And not only in isolation, we need to have data to prove that. One good thing which has happened about the Indian markets about last 2 sessions, so it is not something which is an extremely powerful kind of a news, but then still a relatively good. The reason is like in last 2 sessions, the FIIs and DIIs both have just purchased. The amount is not very significant, but the problem has been, if we just look at the Indian markets, FIIs have been selling heavily, heavily, and very heavily. Last 2 trading sessions is when both of these parties have bought not a very significant numbers, but at least let's just hope that builds up some momentum. A lot of inflow comes in the market, and that will relatively change everything what we are looking. Now the overall summary for the Indian markets: Nifty 50 looks bullish, participation is strong, and breadth is strong. That is what I'm saying. uh, the strength is moving towards larger cap sectors, and that is why that is where our focus should be, because small caps, micro caps, IPOs, I think they have started struggling in the Indian markets, and it's not like they're struggling this week. I think it's been almost 15-20 sessions now they are not doing what they should be doing. Nifty 500 looks strong, bullish, participation is strong, and breadth is mixed. This is S&P 500, the chart which I have praised a lot for almost a month now. Uh, the advances were yesterday at 186, two declines of 314, and the new highs were 9 against new lows of 491. And the breadth still looks good because the market has been really, really good for the US, and obviously it will take certain time, to the market will not just collapse in a one day and everything will go out of blue. That is not how markets work. The breadth still looks good at 20 MA, 323 stocks above 50 MA, 334 stocks above 200 MA, 343 stocks. But while everything looks good, I have been telling you that the exposure cannot be more than in 25-30%. And I'm very, very strong on that. Maybe in the US markets, you can even avoid making new positions. But then, if you are someone who really wants to be in somehow participating, the exposure cannot be more than 25-30%. Nasdaq, I don't think this chart needs any explanation. This is what I have been telling, that no new positions are to be made in Nasdaq. And I think it has taken a lot of time before telling us, but I think I started telling somewhere here that no new positions to be made in Nasdaq 100. This is S&P 500 just trying to replicate what is happening in Nasdaq. And Russell 2000, similar kind of story, although the candle looks green, but then the structure is very similar to what is happening in rest of the two indexes. Now let's look at this contrasting picture which we saw yesterday. I think yesterday most of this bit was green. I mean, barring 1 2 options, I think we had, I think, 6 7 greens. And just look at it, how it has turned. I mean, almost to red and then yellow. Nasdaq 100 is bearish, participation is mixed, and breadth is mixed. S&P 500 bearish, participation weak, breadth strong, and Russell 2000 bearish, participation weak, and breadth mixed. See, like I have been telling you all, I'm not even considering today's data, but overall, if we look at the US markets, a lot of liquidation has started happening. The story is very similar in the US market. A lot of liquidity is flowing towards defensive sectors. People are done with their AI. Profit booking is happening massively. And more than that, somehow these factors have not been in sync with the US market. And that is what I have been pointing almost every day now. Everything in a market cannot be rising. The 10-year yields are rising, dollar is rising, and VIX for now, I think, I don't know, VIX has taken almost a month to tell that the market has become volatile. So that's why people feel, VIX is a very good indicator. But trust me, in isolation, there is nothing which is best in the market. There is nothing which is best in the market. There are 10, 20 factors involved. That is what, builds up a market. And you also need to understand, we overemphasize on the way we trade or invest. For instance, if someone trades or invests technically, they feel the world trades technically. No, there would be fundamental investors, there would be value investors, there will be quant investors. Now they are not looking at the data points which you are looking, getting it. So that's what I'm trying to tell you. There are 10 hundreds of factors which move the market, and that's the reason, just barely looking at the charts and determining what to do, how much exposure to have, I think that's not a good sign. You need to literally build a system and follow that system, because that is how, that is how you can compound your wealth. There is no other way this can be done. Now coming back to the numbers, BTC is hovering somewhere exactly where it was at 63,944. Gold has for sure moved almost, I think, 50, 60 points yesterday towards long side. Just look at the chart. This is dollar. Like I have been telling, a rising dollar is not good for anyone, be it the US itself, because everything becomes expensive. Inflation becomes expensive, in imports for them become expensive. So I mean, this is something, and it is a disaster for emerging markets. And that is the reason, even though we see most of our indexes in Indian markets at their all-time high, near all-time high, still they are not being able to, give that breakout or outperform, just because of this particular, I mean, somehow dollar is not helping any of us. Bitcoin, like I said, it is just forming a base, not moving, not much movement. If you see past three candles, hardly any movements, and that is what Bitcoin is doing. Gold, like I said, I mean, it almost rallied 50, 60 points. A lot of accumulation is happening, at least that is what central bank's data is showing. For me, there are no opportunities in gold at this point of time, because I'm not a value investor. I trade using mostly my numbers and the charts. So that, with that regards, for now I'm not getting confidence in gold, but then if at all it happens, I'll be communicating that. So overall, the takeaway from the market today would be, Indian markets, the exposure should be 25-30%. Let markets literally show you momentum and will increase the exposure. I mean, we all are here to make money, and for sure, the day market shows, at least 3-4 session market shows strength. For sure, we need to increase the exposure. US market, don't build new positions. If at all you really want to make new positions, I think it has to be S&P 500, with not an exposure of more than 25-30%. Gold and Bitcoin at this point of time, if you are looking for a very long term, I think gold is something which you can definitely do, in terms of SIPs, which, you can keep accumulating them on a weekly or monthly basis, whatever is more suitable for you. At this point of time, Bitcoin is not moving much. I mean, even intraday opportunities are getting chopped, so I think that also can be avoided. So overall, I think you can be in the Indian markets with an exposure of 20-30%. You can avoid US market, but then still, if you want to play the game, exposure has to be 25-30%. And gold is good for accumulation, and Bitcoin can be avoided, be it long term or short term. That's everything from my side. I hope you all found this useful. Thank you so much and have a good one.